And once again, thank you very much for being a part of the seventh annual blockchain conference, right? So I am going to be presenting our next keynote speaker, and that will be Mariana Gospodinova. She's actually, I hope I'm pronouncing your name very well.
You are.
Thank you very much. She's actually the European Global Operations of Crypto.com. And by the way, Crypto.com is our premier sponsor. So thank you very much for being on this stage. And I look forward to hearing more about CeFi and DeFi. Please go on and do your presentation.
Thank you for your kind presentation, John. And I'll be sharing my screen in a second with everybody. I hope it works as expected. So, John, can you let me know if you can see it? I guess you can. Yeah, that's cool. Okay, so I'm going to try and make the presentation screen a lot bigger, and so that you don't see my face and not a talking face, but actually you enjoy the presentation. So I hope it works for everybody. So my presentation is going to be on the topic of comparing CeFi and DeFi, and how do they compare to each other, what are the pros and cons of each of these financial systems, and ultimately, what should you be choosing as an investor? So the economy at present is really ripe with new and emerging forms of consumptions. And these forms or trends of consumptions have resulted from the confluence of the technological, economic, and social cultural phenomena, which are currently shifting the conventional commercial exchanges. And of course, major developments in the computer sciences and mathematics have led to the emergence of what we now know as the blockchain technology. And the blockchain technology has led to the amplification of genuine peer-to-peer exchanges with somewhat limited intermediation. With the rapid growth in cryptocurrencies, the blockchain became the underlying technology that has attracted a lot of attention. And it has been primarily known for its use with digital currency, but this technology has various applications that extended way beyond the financial and economic realm. And that includes supply chain management, trade, health, and even governmental systems. So when we're speaking about the adoption of cryptocurrencies, we have to note that cryptocurrencies exist solely in the digital world. And these are also used to integrate and exchange digital information through a process facilitated by the principles of cryptography. And they are enabling secure and verifiable transactions on the blockchain. So cryptocurrencies are traded on global platforms, many of which you're very familiar with. And these are based on the principle of peer-to-peer exchanges. So typically, cryptos are not considered a legal tender because why? They're not issued by a central government or a central bank. So what is the actual adoption rate of digital currencies, you would think? Well, normally breakthrough technologies such as the blockchain technology would often follow the so-called adoption S-curve, and it looks like exactly the letter S. So the adoption S-curve would reflect the cumulative rate at which a population would adopt a new technology or product. And the S-curve would break global adoption into stages along the growth cycle. So you have the innovators who are at the left-hand side down of the S. These are the innovators. Then come the early adopters, and then the early majority, late majority, and the last stage is the laggards. So the laggards are the guys and gals who are the latest to adopt a new technology or trend. So if we take Bitcoin as the first currency, and Bitcoin is a very young asset, right? It's 12 plus years young, and it is much earlier along the curve than the gold. And gold has been in laggard stage for hundreds of years already, believe it or not. So what we believe right now is that Bitcoin is actually in the early majority phase, and this is measured by the number of global investors and then the total amount invested in Bitcoin so far. So as Bitcoin moves from the early majority phase into the late majority phase, obviously the demands of growth of Bitcoin will continue to accelerate. And since I have the great pleasure to be part of the Blockchain Africa conference, I would like to quickly mention the crypto adoption on the continent. Africa has been witnessing an increased cryptocurrency ownership, trade volumes, and interest in some authorities to put cryptocurrencies in a regulatory framework. Africa's population is young, very tech-savvy, and very curious, and is currently being challenged by the weaker local currencies and the very inefficient and extremely exclusive local financial services, which have actually sped up the adoption of crypto. As an example, in South Africa, the South African rand has declined more than 50% against the dollar in the past decade. We'll take Nigeria as another example. Nigeria has a very oil-dependent economy, right? And it has struggled a lot with low crude prices during 2020, so that the country's central bank actually had to devalue the currency twice only last year. Since the cryptocurrencies can provide holders with a more stable store of value, and due to the poor performance of the local economy, we are seeing a really increased peer-to-peer exchange activities on locally present trading platforms. Africa is in a really great position to play a key role in the world of digital currencies, and it is a place that many external companies currently explore for their next blockchain ventures. In particular, and that's not just my opinion that I share, Africa can play a really huge role in the adoption of DeFi. And why is that? Because the nature of DeFi products is actually fitting really perfectly into the developing landscapes. And now, when we speak of adoption of cryptocurrencies, right, one cannot not mention the role that institutions would actually play in the S-curve. Bitcoin and other cryptocurrencies are drawing increasing attention from mainstream financial institutions and Wall Street players. And this comes alongside the growth of interest from governments and regulators as well, because the industry's outlook continues to be subject to really furious debates. In a report published by the Citigroup, their strategists laid out a case for Bitcoin to play a bigger role in the global financial system, saying that the cryptocurrencies could become the currencies of choice for international trade in years ahead. Goldman Sachs, on the other hand, reported that they are restarting a trading desk for cryptocurrencies and that they will begin offering Bitcoin futures, amongst other products, this month, after they have halted a similar effort that they started earlier in 2018. So while banks continue to dip their toes deeper into the world of digital assets, there are a small group of corporations that are busy adding coins to their balance sheets. I cannot not mention MicroStrategy, the company led by the famous proponent of crypto, Michael Saylor, that announced that it has purchased additional amounts of Bitcoin, increasing its exposure to the crypto asset to almost 91,000 Bitcoins. Elon Musk, now also known as the techno king, has made a 1.5 billion. This is a staggering investment in Bitcoin on the company's portfolio. By company, I mean Tesla, which on its end, if you remember well, caused a huge surge in the asset pricing, and effectively, it actually prolonged the bull run, among other factors. Then I have to mention Jack Dorsey as well, who is the CEO of both Square and Twitter. Jack Dorsey made Square invest 170 million in Bitcoin. And recently, Twitter also announced their plans to add BTC to their balance sheets. Now, when you look at all of these super famous names, and then you actually mention the likes of PayPal and Facebook, who are ubiquitous among the retail users, you would see why institutions are actually playing a sizable role in the cryptocurrency adoption. So speaking of cryptocurrency adoption, how can one define the crypto ecosystem to start with, and what is the application that crypto has? There are plenty of explanations that you're going to see online about the layers of the crypto ecosystem, but for the purpose of this presentation, I would like to keep it very high-end and short and just split it into three major layers. The first and foremost, you have the blockchain infrastructure. This is the foundation upon which different layers and services can be built, right? And then comes the second layer, which is equally important, and this is the cryptocurrencies, because the cryptocurrencies or digital assets are the underlying utility of the network. Last but not least is the application layer that offers the interface with the end user And this interface provides investors access to various products and services that address, amongst other things, all the use cases of traditional finance. And they do that in a very new and innovative way that does not involve intermediaries such as banks or clearing houses. So currently, there are two ways to offer financial services on the blockchain. There is the centralized way, or the so-called CeFi, and the decentralized way. So as you know, blockchains operate in a decentralized manner. However, the first applications that emerged in the crypto space offered centralized financial products. And in CeFi, users would trust a centralized company, one institution, one company that would store their funds, their digital assets, and they will provide various services on top of the custody of funds. So currently, most CeFi solutions are related to cryptocurrency trading, but there are many other applications that have gained popularity recently. So if we speak of CeFi, we cannot not mention the DeFi, which has recently rose to an exceptional level. And DeFi products are actually likely to have a significant impact on the way that banks operate in the future. And some people even say that they may have the potential to shift the structure of the whole financial ecosystem on a macroeconomic level. Decentralized finance, or DeFi in short, is an umbrella term, right? And it encompasses the vision of a financial system that functions without any intermediaries whatsoever and is operated just by the power of smart contracts. DeFi applications strive to fulfill the services of traditional finance, but in a completely permissionless, global, and transparent manner. So to visualize it all, DeFi is all about transforming the traditional banking services to decentralized architectures that are not managed by any government or regulators or banks, but are managed by the communities instead. So on the next slide, I would actually like to take you through a journey. On the next couple of slides, I'll take you through a journey to see how do these two financial systems, the DeFi and the CeFi, compare to each other, and what are the pros and cons of both CeFi and DeFi. I'm going to start with accessibility, right? Because to use a service, first, you must be able to access it or to know how to access it. So in CeFi, when you go and you try to open an account, you normally are prompted to do a KYC process. And that KYC process can be extremely easy. So you just, put your face in front of a camera, you hold your passport, and then you're accepted to use the services of that company. Or depending on the location of the CeFi provider and depending on whether or not they are a regulated entity, you may be subjected to an onboarding process that is a little bit more difficult or different. But what does that mean? This means that you still have a barrier to enter these services because you have to pass the KYC. So you typically have to be located in a country that is supported by this company, and their risk appetite should be such that they can accept you as a customer. And they're going to be asking, in some cases, a lot of questions to define whether or not you as an investor would fit into their risk appetite. So how about DeFi, though? How is DeFi accessed? Well, DeFi, to start with, is completely permissionless. What does it mean? It means that as a user of a DeFi system, you don't need any permission to use it. In DeFi, users can directly access the services using a wallet, and that can be a software wallet. You can use your MetaMask wallet, for example, or your non-custodial Crypto.com wallet, or you can use a hardware wallet like your Ledger X or Ledger Nano. And you don't have to provide any personal information whatsoever to whoever offers the DeFi service to you. So DeFi, in that sense, is openly accessible to all parties without any barrier or without, one may say, discrimination. And moreover, there is one important part that DeFi allows individuals who are planning to build on top of the centralized platform to do that freely, as it provides a really high degree of accessibility and supports collaboration within the community. So any products developed within the DeFi system are designed to benefit from each other. So next, I would like to look into how do CeFi and DeFi differ in terms of convenience. So CeFi products would usually come to play with a very neat and user-friendly user interface, right? You would never have to access a protocol without the UX. So the companies offering the CeFi would actually also offer you a lot of support while you're trying to set up your account and access the services. And generally, those services may resemble a lot traditional financial services that you have been using before. DeFi, on the other hand, can be a little bit challenging to a user that is, let's say, not so experienced with cryptocurrencies or with blockchain, or is not even that tech savvy. So DeFi requires a basic knowledge about crypto, about blockchains, and it could be a little bit less intuitive to a large number of users. If you think of it in relatable terms, if you had to introduce your grandparents to a blockchain-based financial service, would you go for a centralized product such as, let's say, the Crypto.com app, where they can register just holding their ID, and once they pass the KYC process of the company, they can buy and sell crypto, they can even order a card that works like the cards that they already have? Or would you rather introduce them to a DeFi product? Would you teach them how to set up a DeFi wallet, a non-custodial wallet, how to add assets to it, and how easy it would be to plug them into a platform like Uniswap, for example, and teach them how to swap their F, let's say, for Compound or for Nifties. So as you can see, the convenience, obviously, the pros would lay within the CeFi industry. But in my view, this can very easily change with the expansion and the growth and the development of DeFi products. So next, I would like to take a quick view of how do these services play a role as a bridge to traditional money. Again, CeFi, in its own nature, would provide a gateway where users could purchase crypto with fiat and sell crypto to fiat, right? And it's very easy for CeFi companies to offer fiat-related services because CeFi normally requires you to open a company, and this company, depending on their compliance with applicable laws and regulations, would be able to open a bank account and to open contracts with different providers. And these providers would offer you the option to have fiat added on your cryptocurrency exchange or cryptocurrency platform. On the other hand, DeFi would very rarely actually support fiat to crypto conversions. So users would have to kind of purchase their assets or the initial assets, let's say the F that you would be holding on your non-custodial wallet. You have to purchase it with fiat, ideally. If you don't have any cryptocurrencies, you have to purchase it with fiat and do so probably on CeFi providers. Apart from the ability to buy easily with fiat, CeFi exchanges actually support the trading of coins like Bitcoin, Litecoin, Ripple, and other popular coins that are offered on independent blockchain platforms. And because of the latency and the complexity of performing cross-chain swaps, DeFi services do not support these tokens. So CeFi can easily overcome that issue by getting custody of funds from multiple chains, right? And it is a significant benefit to the CeFi providers because they have access to the most frequently traded and high market cap coins, such as Bitcoin. So definitely it plays a role whether or not you're able to offer Bitcoin exchanges or Bitcoin trades on your platform. Next, I'd like to shortly overview how do these differ on privacy. So apart from the fact that CeFi normally would offer you a centralized approach, this means that a CeFi company would have full control over your privacy, over your money, and over your data. So as a CeFi user, you actually have to make sure that you have done your research about the company that you're using and whether or not this company has good governance principles and whether it's prudent enough and whether it has the ability to safeguard your data and your privacy, your personal information. Normally, what you should be looking at is whether or not this company is openly announcing who the founders are, what is the background of these founders, is this company certified in any way, do they have any data privacy certificates, any privacy or personal information disclosures that they may have done on their website. Are they GDPR compliant, or are they complying with other privacy laws around the world practically? So this is a third-party risk that you're facing, because any company that you provide your personal information with would then be able to use that personal information if they so decide. So it's all a matter of knowing who you're dealing with to ensure that this company is, for example, not selling your information to third parties for the benefit of obtaining, financial proceeds from that. In DeFi, however, the situation is completely different, right? Because in DeFi, users would have full control over their data, their money, and their identity. And actually, DeFi is the exact environment, the exact world where one can benefit from the privacy perspective. And this has come as a selling point to a lot of the advanced blockchain users. So next is regulation. And I included that topic to make a very interesting point, right? So regulation is recently extremely popular amongst cryptocurrencies in the CeFi world. There are plenty of regulatory bodies that are looking on how to put legal framework around cryptocurrencies. There is the European Commission that has recently published a draft of MiCA, the European crypto regulation. There are various countries in Europe that already regulate blockchain innovative technology arrangements or cryptocurrencies. And I personally live in one such country that already has companies under its arm that are fully regulated by the Maltese Financial Services Authorities in the means of providing virtual financial asset services to the public. And Crypto.com is one of these companies. Then when we speak of DeFi and regulation, the whole concept of DeFi defies regulation, right? There is currently no regulatory projects that are encompassing DeFi services. Wrap their heads around how to actually regulate DeFi. And why does it matter to the investor? Normally, as a retail investor or even as an institutional investor, if things don't work the way you want them to work, there is one higher instance where you would be able to complain, especially as a retail investor. Let's say in the cases of the recent case of Robinhood, retail investors were actually able to complain to the regulator. And very often when you're not experienced, when you're entering a market that you're not quite sure how to make benefits from or how to use, you need an instance that is able to control the company that offers you services by the means of regulations. That's why regulation is important, particularly in the traditional financial world. But we have to take a note that us as society, we have evolved, but we are still, I would say, participants in the traditional financial world, and we are still used to operate or to live by the principles that governments would offer us, and the principle of protection and making sure that the regulator exercises a prudent oversight over entities that offer us financial products is really important to a lot of us. So next, I'd like to take a shot at the key risks that people are facing with CeFi and with DeFi products. So centralized exchanges would face a lot of attacks because they hold custody of user funds. And your funds are normally as secure as the safeguarding measures that the CeFi exchanges are willing to provide you with. What does it mean? Recently, I've had a discussion with an old friend of mine that told me that hackers are always on the lookout, right? And when the company becomes big enough, it's only a matter of time until they find a way how to attack that company. And normally, why do they do this? To either steal personal information, to steal money, or to steal credit card details that they can then sell on the dark net and make profits out of it. So when you put your funds in custody with centralized exchanges, you have to be fully aware of the risk that this exchange may suffer an attack. And if they don't have strong enough safeguarding procedures, they don't have insurance, they don't keep your digital assets in cold storage, your assets may diminish. Another instance would be, and we have seen various examples of exchanges that would actually go bankrupt because they're not able to sustain profitable operations. So these are all risks that you have to consider when you're choosing a CeFi project to put your money in. On the other hand, in DeFi, there is no such risk, right? Because the platform does not store user funds. So the only thing that you as an investor should pay attention to is the code and the consensus algorithm used by the DeFi project. And sometimes the underlying technology may come with bugs and other issues, and this is not unheard of, right? Due to the nature of DeFi, many of the protocols are built or developed by significantly smaller teams than the typical corporations would have, and these teams would have limited budgets. So that would normally increase the risk of smart contract bugs, right? Even in the case where you have bigger teams that develop the protocols, and these protocols may be, let's say, audited by a reputable audit firm, the vulnerabilities and bugs would still appear. And due to the immutable nature of blockchain, this can lead to loss of user funds. So you need to take into account when you're locking funds in a smart contract, because essentially the smart contract is the thing that holds your funds. It's not a centralized exchange. There's not a company and not a single person that is responsible for them. So in addition, one of the biggest advantages of DeFi is also one of the greatest risks that it poses. And this is the idea of composability. And my friend Henry has earlier spoken about the composability of DeFi. So DeFi protocols are permissionless and they can seamlessly integrate with each other. What that means is that the entire DeFi system is heavily reliant on each of its building blocks. So this is what I refer to when I say that the applications are composable. They can easily work together. So why is this a risk, you would say? Well, if just one of these building blocks fails to perform, that poses a risk to the whole ecosystem and it may suffer out of that. So for example, this is one of the highest risks that yield farmers would face with liquidity pools. So last but not least, how are these two types of financial services comparing when it comes to the returns that you may be gaining by using one or another? So in centralized finance projects, you would very often see fixed returns. What do I mean? Take, for example, the Crypto.com application, where you can have an interest-bearing deposits. So if you're not a cryptocurrency trader and you're just a hodler, you may decide to put your crypto to work by putting it in an interest-bearing deposit. And you would have the option to choose a flexible deposit where you can take out your assets anytime you want, or you can have a fixed-term deposit where you can just park your assets for a fixed amount of time, and you would get an interest paid that is also fixed. So that interest can very often go up to 12%, depending on the assets that you're holding. And it's calculated on an annual basis. And in the case of the Crypto.com app, it's paid on a weekly basis to the holders of these cryptocurrencies. How about DeFi? Though DeFi differs a lot when it comes to the rewards that you could be getting, but it differs not just on the upside because the reward could be greater, but also on the downside because you could actually be losing money if you don't know the principles of DeFi yield farming. So yield farming is one of the most popular ways to put your crypto to work. The first step in yield farming would involve adding funds into a liquidity pool, right? And these liquidity pools are actually smart contracts that contain funds. So these pools would power a marketplace where the users themselves can exchange, borrow, or lend tokens. So once you have added your funds to the liquidity pool, you become a liquidity provider. So the DeFi protocols would enable, for the first time, anyone to borrow or lend money on a large scale, doing it between other participants, such as themselves, and without any intermediaries, which we're so used of, like banks or exchanges or clearing houses. So those applications would bring lenders and borrowers together, and they would set the rates automatically in accordance with supply and demand. So a lot of these protocols are truly inclusive and anybody can interact with them at any time from any location and with any amount. And typically, the estimated yield from farming is calculated on an annualized basis. So the commonly used metrics will be the annual percentage rate, the APR, or the so-called annual percentage yield, the APY. Normally, the difference between these two is that the APY would actually consider also compounding. And as you know, in finance, compounding means directly reinvesting the profits of your investment to generate more returns. And it is also to be noted that in DeFi, it is very difficult to calculate how much the yield would be on an annual basis, because yield farming is a very highly competitive market and it's very fast paced. So the rewards could actually fluctuate very rapidly. For example, if a yielding strategy would work for a number of days or weeks or a year, a lot of farmers would actually jump to that opportunity, and that would cause the high returns to stop being so high. So the interest that you would be getting as a return would be much lower. In conclusion, I would like to kind of speak about the benefits of both centralized and decentralized financial applications, because they both have the same goal. They plan to make crypto trading popular and crypto holding popular and improve the holding and the trading volumes of cryptos. However, these two ecosystems actually carry out their objectives in a very different manner. So CeFi would promise you security of funds, fair trading of these funds, and investors would actually be able to use conventional currency as well, so they can take part into the crypto trading. Moreover, centralized exchanges would provide customers with customer support services. So whenever things go wrong, you have not really an authority, but at least an entity to complain to before you go to the authority to complain to. On the other side, DeFi actually wants to make things intrusion-free. It provides a space for investors to implement their strategies without having to deal with an intermediary body. So both of these models would have pros and cons, right? And it only depends on the investor and the investor's needs. If you prefer transparency and privacy, then DeFi is definitely the right model for you. But what you have to remember is that you have to have certain level of technicality and be a little bit blockchain and crypto savvy to use those services. On the other hand, if your priority is trust and sharing of risks and flexibility and increased options to invest, you should definitely opt for CeFi. And with this, I would like to conclude my presentation, and I'm happy to accept any questions.
Mariana, thank you very, very, very much for this great presentation. I've learned a great deal, and I know we've already chipped into the tea break for some of you guys, but this is a great topic for which I have quite a few questions for you. So some of the guys that certainly don't want to go on the tea break, I don't need to go on a tea break. I'm having my tea break moment right now while I'm talking to you, Mariana. But I want to bring in a couple questions that will certainly enlighten the audience here. And I do have some of my own regarding crypto.com as well. So the first question is, how can you, let me see here, how can you claim to be DeFi non-custodial if you own the private keys of the wallet?
Well, that's a really interesting, let's say, a really interesting question, because typically DeFi products are owned by the community, right? When the code is open, as opposed to companies who would open the code. So I'm guessing as long as your code is open and anybody can contribute to it, you can call yourself a DeFi product or a DeFi wallet.
Okay, so I'll move on to the second question. This is somebody from Zimbabwe, and I do believe that his question certainly taps into other nationalities across Africa. Okay, so he says, I'm a Zimbabwean based in South Africa. We are currently not allowed to open accounts on crypto.com. I understand why you exclude Zimbabwe, but why do you exclude Zimbabweans who are not resident in Zimbabwe? But I can certainly extend a question to not only Zimbabweans. There are other guys from probably Malawi and the DRC as well. What are the criteria, and why are those countries excluded from being a part of Crypto.com or similar project like that around the world?
Okay, so I'm really sorry that you weren't able to access the services, but I have to explain something very clearly. So first, for the app, the Crypto.com app is available as long as it has been approved in the App Store of certain countries. And the App Store would have very stringent, let's say, measures when it comes to providing access to a certain application in certain countries. It could be related to regulatory stance of these countries. It could be related to other concerns that they may have. That applies also for the Google Play Store, not just for the Apple Store. But then on another hand, I have to say we don't exclude people based on their nationality. We don't discriminate people based on their nationality. And if for whichever reason that person who asked the question was not able to access, and he thinks he was not able to access the service because of his nationality, I would be very happy to assist in the onboarding process. And I'm happy for him to drop me a line in the common space, in the lobby, and I'll try to assist, because that shouldn't be the case on our platform. We are open for people with any nationality. Of course, jurisdictional restrictions would apply in cases where it concerns the country in which someone is a resident.
Would you, just to add on that, Mariana, would you say that, because I know for a fact that certain countries are probably banned because of the geolocation or the political reasons or whatever. So through the IP address locator, automatically that entire country would be banned, irrespective of the people living in there and whatnot. So it's happened to me as well before. I am originally from the DRC, although I am a permanent resident in South Africa. So it happens to me. That question is valid not only for him, but for a lot more. I have another question here regarding your cards. When are they arriving in South Africa? But it's not only South Africa. It could also be, and it's probably the same reason as before, the other question, around other nationals across Africa.
Sure. So we are actually working on a local solution in South Africa. I have a colleague of mine who manages the South African operations of the company. So I would say stay tuned, because launching a card, especially the way we do it, because we're trying to not just provide a white label card that is quickly whipped up by a number of participants, but we're actually owning the infrastructure. So it's really a lot of hard work to set up the relationship with Visa. And we're a key partner of Visa. So setting up the relationship with Visa and making sure that our processor would work on the ground, and that we would be authorized to issue cards on the ground. This is hard work, because this is bringing blockchain to a very traditional financial system. So it takes a lot of time. However, we are working on a South African solution, and I'm not aware yet whether we would be able to distribute cards from South Africa to other parts of the continent, but I surely have my fingers crossed for that, because we do want to offer a global card coverage.
Would you, just a second question to that, I think I'm just filtering quite a few questions and combining my thoughts into one. Would you say that card issuing, and I've seen that for most crypto projects, really, card issuing in Africa is an issue, really, especially when it comes to Visa and Mastercard. Mastercard has got a little bit of a program that is not as rigorous or stricter as Visa, especially when it comes to crypto adoption as well. What would you say are the limitations around those two trying to offer card services through platforms like yours across Africa specifically? I know that in Europe, it's a lot easier and smoother, although sometimes in the US, it could also be a little bit tricky. What would you say African nations need to do, whether it is in Namibia, South Africa, Nigeria, Kenya, African nations need to do for them to be easily onboarded and use these services as freely as possible, like the rest of the world?
Okay, I'll split that question into two parts, and first answer if the card issuing is a niche product, and why is it so much easier in Europe. So technically, to issue a card, right, you have to first choose the card brand, whether it's Visa or MasterCard or Discover, you name it. So typically the two most popular would be MasterCard and Visa. However, to be able to offer these services, in Europe, for example, we have something called the pan-European license, which allows you with one license to issue cards across the whole European area. In Africa, you have to do it one by one. So in each country, you would have to get permission to use an issuing license, whether it's your issuing license, which is the more difficult part, or whether you're partnering with an issuer that has been authorized as a primary member of Visa or of MasterCard. It's a business choice. However, it's difficult for this to become, I would say, a cross-border, cross-African border product because of the technical and the business difficulties that card schemes have put in terms of operations across Africa. Right. And I'll be very happy to see an interoperability there that is similar to the European Union or similar to the US, where you would cover all the states with just one license. But unfortunately, that's still not the case. And then what can the African community do to be able to get cards quicker and to gain access to financial services? Unfortunately, because the nature of providing centralized financial services is such that you have to take each jurisdiction as a separate instance. And when I spoke earlier about the KYC and the entry barriers to a certain service, these are different depending on the country that you reside in. So not the country that you were born in. This shouldn't be taken into consideration, but the country you reside in plays a huge role. And it also depends on whether or not your country would actually accept cryptocurrency, whether they will attempt to regulate it, and whether they will stop us from operating on the ground, because this could also be the case. So sadly, us as actors in this space would have, let's say, the least ability to affect the way services are provided.
Sure. Mariana, thank you very much for your contribution. If you don't mind uploading your presentation into the handout so that people can actually benefit from that, that would be great. I look forward to talking to you pretty soon. Guys, we are going to move over to the next stage where we talk about tokenization.